I'd love to for you to tell us more about edrone, like what you do, what you're building, and where you are in terms of your company development, so that everyone can understand.
Sure. So welcome everyone. Yeah, I hope I will not say too much about the product and the company because
shortly,
like,
obviously,
yeah, that will be long. But just ask me any questions if anything would need to be clarified. The big picture is that we work in e-commerce space and we help online retailers to make better relationships with their clients. But what is special is that we focus only on the small clients, SMEs, and this is what differentiates us from the competitors on that quite competitive market, which is like CRM, marketing automation. If you hear things like that, it's not associated with something very, very new. You rather think about like companies that were built like 10 or 20 years ago, maybe. So what differentiates us is that approach that we work with the small clients, that they require something very, very special. They have zero, technical skills. Usually, they have very little understanding of marketing. Sometimes they have little understanding of e-commerce even, but they know what to sell and they know their industry, and this is mostly what they know. And all the rest, the product should provide them, should help them. Just
awesome.
to leverage all what they know about the products.
And tell us, also, how many people you have within your team, and also that was the third investment round. So, like, where you are in terms of, let's say, the journey that you want to go to.
Yeah. So yes, we started 2016. Today we have over 150 employees, and. Well, what I think is also special that we were bootstrapping the company for like 4 years initially. I didn't believe in VC path basically. It was, no. But
we will cover most of the discussion.
No, but that was that was some time ago. But then in 2020. We closed our first investment, and then I learned something very special about VC's investment, that there is, for each round, you should have like one purpose. And the first purpose was to become a metric-driven organization at the first round, and to verify the model. It was very difficult to verify the model with little money, because we were like verifying the model very, very slow. My idea was to hire a lot of salespeople and to build large sales organization. And I wasn't able to do that without capital. So that helped us to verify the model. Then was the second round where we were able to verify our ideal customer profile. So we thought about like large accounts, but then we understood, thanks to the second investment, who is our ideal customer profile, because we went to different markets, different segments at very short time. Burned that money. Sorry, Robert. For, earning money, but you know what I mean?
Robert's money.
And we learned a lot, And then finally the third round, where I think we know quite a lot now about, the strategy that would work for us, about the product needs, either our customer profile and so on. So now we can scale the business on, being like more aware of
we will cover the next steps a bit later on. So Robert, please tell us more about yourself and also about your investment portfolio. I've seen that you're a serial startup angel investor. So tell us about the current companies that you already invested in, obviously besides edrone, and also tell us like what type of companies you are currently looking for to invest.
Hello, everyone. I'm Robert Ditrych. I'm a public and private investor, so I'm active on the public market. I'm also active in the private space. I had invested in a couple of startups, around 12, I think, at that stage. I think my profile is not really typical. It's more typical in the US to be active on both of those markets. Not really a lot of people are pursuing this path. So before I used to run the company, which was the public one. So I have understanding of the capital market from both sides, and that helps to create value and help entrepreneurs building their companies. So I'm not afraid to invest in rather later stages, because I believe there is much value to be created. And Michał is very modest gentleman, I would say. So
Thank you.
he said he told you that he raised money to prove the business, but I have different understanding. My understanding was that I already invested in the proven business model, and that was really important for me, that I could have excellent leadership here, proven business model, and potential for scaling this business abroad. So those three criteria made, for me, edrone a really obvious investment. And that was the part of the story from my side. Yeah, that's my perspective on the moment.
So if you already touched your, let's say, perspective, then I wonder what, in your opinion, also caused other investors to invest in edrone within this round, and obviously within the former rounds as well.
You know, it was not that easy at that stage to raise capital for edrone in Poland, because company was bootstrapping for quite a long time, relatively, if you compare to other startups. So they went through not that obvious path. And for that reason, many of investors in Poland were looking kind of...
But the bootstrapping was not something unusual? Is that what you mean? Or what you mean by unusual path?
I mean that company was bootstrapping for quite a long time and then turned to private investors to raise money. And people were kind of suspicious, and they were not that sure at that moment. So for me, that was opportunity, because I believed in the leadership, I believed in the model, and also the scalability of that model. So I found it as a perfect opportunity to enter at that stage and make that investment.
Okay, Michał, so tell us, let's start, with the most important part. So what are the key insights that you can share with the audience, especially with, entrepreneurs that are currently also exploring fundraising efforts from the current round? Like what immediate, let's say, thoughts are coming to your mind?
Yes, I think that there is like a lot of, knowledge over internet and in the books, a lot of things you can learn. But the problem is that most of them are about stories from US, especially, or from other markets. And each market is different. Each market is having different access to capital, different networks. There is always discount on investing into companies on certain markets, Polish market. Obviously, that also changed because of some geopolitics that we also observed. So this is cool to just try to emulate somehow best practices from US companies, or even from some succeed startups that we have here. We have few examples, of course. We had a huge round of RAM, for instance, in the past, or now 11 Labs. But I think what is risky is to try to copy, or to emulate this traits or these cultures of those companies, or the investment path into the company that you are currently operating. And why? Because I think there's especially there are different trajectories. If you think about the growth, for instance, the pace of the growth, so there is a different expectation for the growth, I think, in the US than on the Polish market. I mean, of course, it's good to be efficient, to grow fast, but it depends. The growth has greater value in the US. The efficiency is having greater value here for sure, because we need to gain more trust, you know, so different metrics may have like different value in the view of the investors. And I think this is the main part, you know. We should like figure out what investor want to pay for. I mean.
Okay. So what you had to adjust, or it's probably both to you, on what type of metrics, you know, you think the Polish or Central European startups should pay attention, and from both perspectives, right?
Wanna take this one?
Changing and evolving all the time.
Yes, yeah, that's primary. I mean, of course, like quick experiments, proven experiments. This is the primary thing, and it depends again, you know, on the stage of your company and what you are fighting for. So we are like very close to the business from the very first day. So as Robert said, on the very beginning, we were bootstrap company, so we had some proven business model. You know, just maybe the metrics were not that good, you know, or maybe the growth was not that fast as it should be, you know.
Okay, can you name a few key metrics?
Yeah, sure. So when we got to 1.3 million in dollars ARR, you know, annual recurring revenue, when we secured our first round. You know, it was late 2020. And so we grew from 0 to 1.3 without any, you know, outside capital. And that was fine, but we were growing at that point like 30% YOY. You know, when portfolio invested, it was maybe 34, which was like, you know, way below. You know, you should grow above 100% for the, you know, Polish market to be visible, to be attractive. You should grow about 200% or 300% at the same size on the US market, for instance. So that was the first thing. But what we had, you know, we had like quite good thesis for the investment, which I think worked there. And then we were able quickly to show that after getting this money, we grew about 100%. You know, it took us like half a year to, you know, change from 30 something to over 100%.
Can you name what was critical for securing that growth in terms of?
Yeah, I mean, the thesis was that we need to heavy hire and build sales machine. Okay, and that was like that easy. And we had some experience on those, so you know we were able to implement that. And that allowed us, because the first round was divided into 2 tranches. So, you know, the investors, they seen that, wow, okay, they achieved that milestone. So very quickly we got the rest of the money from the investment. That investment was 2.5 million the first round in dollars. And you know, so in our case, this is very different because we already had some proven. Maybe that wasn't a proven business model, but we already, you know, had some traction and some size for the business, and we already had some, you know, management, blah blah blah. But there are like other companies, like for instance, you know, some of the companies may get even much larger valuations and bigger money with no traction. You know, some seed rounds may be larger. I mean, that was also seed, but you know.
So Robert, what do you think about this early stage investments? Like when you maybe have an MVP, but you haven't broadly tested it yet. Is that something that interests you? And do you think, that you need to target just different types of investors probably with this type of development stage, right?
I'm looking for investment at any stages, I would say. Early stages are perfectly fine, but critical is to bring the MVP to the market. Like, if you don't have MVP, build it. Let's fucking build it, yeah? Like, raise some money, some capital from friends and family, and build it, and show your skin in the game, and bring that to the table. Because if you're looking for someone to invest at a stage where you don't have product, you have just presentation, and it's not investable from my perspective. And many entrepreneurs are trying to raise money, capital with just presentation. but you're just wasting time. If you are able to build it, show it to the market, bring it to the market, then you will get funding.
Okay.
I'm not sure I answered to
a bit
to your question, but
maybe Robert, to clarify something what you said, like I don't know, 10 minutes ago, maybe, you know, about, or 15, about that you used the opportunity because there was nobody able to invest into edrone in 2020. Really, there was nobody here in this country to invest into edrone. Why? Because we already had been on some level. And usually, especially at that time, you know, the landscape was a bit changing, but it's still very similar. That, you know, Polish VCs are investing in seeds, in seed, okay, and they want to make money, you know, on the round A, basically to cash out on round A, or you know, some. I mean, like they basically make the money when there is another, you know, a broad investor on the later round, and so it was too late for us to secure like $500,000, $1 million, you know, which was typical size of the ticket for the Polish VC. So we needed to find the first investor outside. And there was like, obviously the first questions, hey guys, why haven't you got any like investment on your domestic market, you know, where people know you, where you have some credibility? And then I said, yeah, because I don't believe in VC, you know, and asking VC for money. So that was a bit difficult because I knew that, okay, now is a good time for us to secure the money, but the bar was high because I couldn't make it in the Polish market, so I need to find it outside, you know.
May I expand on it?
Yeah, sure.
Yeah, that's true, that I wouldn't say no one, but not so many wanted to even consider investing in edrone. The common perception was that edrone is really red ocean, is trying to compete in really red ocean market, but they didn't look at the company and the quality of the management of the business model. So I'm not surprised that finally Portfolio, which was the Hungarian VC, invested in that round, and a couple of angel investors. I personally ran the syndicate that invested in edrone, so alongside like 12 people invested, and with different background, different perspective, and I think they also brought something to the table, helping Michał and the management with some issues in different areas like people, HR, finance, technology, like different parts of the business, and I think that was the value add for Michał. And I also believe that was a good strategy to pursue, because they wouldn't get that much just from finance investor, like institutional investor, but those investment, like Portfolio and a couple of angels, like proven that it's investable. So it was much easier to convince other players, other institutional money to get along and invest alongside.
Okay, based on those experiences, can you, because Michał mentioned that there's no playbook for like a Polish, startup or Central European startup income that would allow others to learn from or to get some good practices. So would you be able to, list 3 or 4 of those good practices that should be critical for others to follow in order to, be more effective within raising rounds? That's probably for both of you.
It depends on the stage of the business. I would say the investors are looking for scalable businesses. So in Poland, we have this problem that we're starting with something really local and then trying to internationalize the business. But what investors are looking for, they are looking for big outcomes, big potential outcomes. So if the business is or idea is really scalable, it should start internationally from the day one or day zero. Should start with this concept from inception. It should be going internationally, and that kind of businesses that are technology scalable. Those are potential to raise money. So build a product.
Were you scalable from the day one, or did it? Or you were forced to be scalable because of the VC funding?
I believe that we are. I'm sorry, no. I believe that we are scalable. I always wanted. I mean, this is why we started this company, because I didn't want to do anything like agency business anymore. I wanted to build a scalable product. But what I observed, because the first round was different. The first round was like a story. We had some business. We just needed to convince the proper investor that we are able to improve our motion. Few of the metrics significantly. So that was the story, and then we did it. So that's okay, marked. But later, I had like. I was looking for the next round, okay, which was the different story. At the next round, we wanted to just really find the ideal customer profile, just, to find the proper markets, to experiment further. And for that, we already, had some money, so investors were looking on the efficiency of the capital. So what Robert mentioned, so somebody invested and how much money we generated. If you spend $1, how much of the recurring revenue you're producing out of $1 you spend. If you produce $1 out of $1, but recurring $1, that's fine. If not, that's bad.
That's fine, or is that
No, I think
enough?
It's great if you can generate like $1 recurring revenue out of like $1 spent. I think that's fine. All above that is
Robert,
cool.
do you agree?
I would like better.
No, yes. So now we are generating more than $1 by spending 60 cents. So okay, we are doing much better today. But there was time that we were like spending $2 and generating $1 of the recurring revenue. So, but what is the most important that you have some discussions with some investors. Some of the investors having like different threshold, same saying, I'm investing at $5 million ARR or $10 million ARR at certain like growth pace, whatever, certain net retention. And you have some talks, you just discuss with the investor and they say, okay, that's fine, can you share this and that? Let's catch up in a half year, 6 months from now or 3 months from now, and then they meet again and you tell the story and they say, yeah, but you recently told us that you get to some certain point. So how was it? Yeah. So I think this is very important, to build this credibility that, especially for the companies like ours, where I think that the efficiency is the key, how you manage the company. This is like more important here. Than in the companies which are having like one technology that needs to be like bought this month, because otherwise somebody else will build it. Our story is SaaS business is different from deep tech business. Okay, we are rather like SaaS business. So in SaaS business, the efficiency is super critical. So we were able to show, okay, we'll be there. We anticipate 120% YOY growth on this market. Let's catch up in 6 months. There we go, 125. All cool. Yeah.
Okay. If you were to compare all the 3 runs, right? Which one was the hardest to get, and why?
Each one was extremely hard. So I don't know if there are like any rounds that are not hard. Maybe on stories on LinkedIn only.
Okay. So have you because we are saying that these days it's harder to get financing than before. So I wonder whether you see that trend in your negotiations and discussions with investors.
Yeah, I would say the hardest round was the one that we made on the peak. where that was the easiest to gain the capital. I would say that the last one was easier than some of the previous one, the second one or the first one, I would say. So but we just managed to improve the metrics. So,
Robert, you're eager to add something.
Yeah, because Michał answered not about the market, but about the conditions with which we came to the table, and the track record we came to the table, and that was super important. Conditions are much worse than they used to be, so it's harder to raise capital. Not many venture capital funds are active on the market. PFR is going to introduce new funds and new capital to the market this year probably, but at that stage there is really little capital and not many active investors. So for that reason it's much harder to raise capital at that stage. You need to have something to really convince investors, and I believe edrone had that.
So can you, Michał, maybe give us some examples of the hardest, let's say, discussions or the hardest questions that you were, let's say, you've heard from investors during the entire process?
Yeah, I think that
something that surprised you in terms of their expectations.
Yeah, so on the early investments, it was about the knowledge. I was the first-time founder at that time, so for me it was like very, sometimes difficult to find proper benchmark to understand, which of our achievements are good or not. So I had to learn quite a lot. But after time, over time, I became kind of expert. So I know the industry now, and I know the benchmarks, so I know whether we are on the 75th percentile or the 19th percentile of the best, SaaS companies or not. So this is really, really helping talking with investors, because I think, at least this is my experience, you need to work through, let's say, 100 of firms. This is from my perspective, you need to talk with 100 firms.
Exactly, this is something I wanted
so
to
it's
address.
much, so it's much easier.
What's your strategy? How many?
And this is critical. I was able to went through 100 investors over 1.5 months, for instance. Or 2 months. I can do that now because I have the proper tools today. I know how to compare us to others, answer questions.
Tell us a bit about those tools.
Yeah, but Robert, I will tell, but Robert is willing to say something, I think.
Yeah, you were asking about tips we can give to others. So for sure is to have the product ready, think big, because if you really want to raise outside capital, I mean venture capital funds, you need to have big vision, and before you should think if you really are on the VC way. It's not that obvious. You can go with bootstrapping, but you playing different game then. You can change if you have that good performance that edrone had. But I think that's critical. And the third part.
Can you name what is the VC way? What criteria the company has to meet in order to be VC? On the VC radar, in a sense, you mentioned scalability, right? And thinking big, but what else should be there in order to think about this path instead of other?
Absolutely. If we would go backwards, going from the exit. So what venture fund is looking for? They are looking for company that they are able to exit at billion or hundreds of million dollars valuation. They are looking for one investment that will return the whole fund. That's basically the strategy, that they are investing in many companies, but only few of them are successful. So one should...
Is edrone on that trajectory?
Yes, I'm pretty sure about that. It's happening with my mic. Yeah. Don't play with my mic. No, definitely we will, because what we have shown already that for this during these 3 years we over tripled the valuation, which is not like something that I'm really proud of, but it's not that bad, you know. I mean, securing the third round in 3 years is kind of, you know, achievement, because we see a lot of rounds that were like, you know, with the high valuations, but of course there was a chance they would make huge businesses out of them. But most of those companies then are verifying their, you know, valuations, and these valuations went typically down in the recent years. So, you know, we went up over 3 times, where, you know, the landscape is that most of the companies went down of their valuations, you know, dropped the valuations. So, well, of course, I'm like thinking or aiming more, but you know, but if we are able to multiple the valuation like twice every year, that's, you know, simple math. Few more years and we can get there. Yeah.
Robert, do you agree?
Oh, it's the power of compounding. If you are able to invest your capital over a certain rate, let's say 30, 40, 50%, really quickly you're building the value in the company. So I'm absolutely sure edrone is on the path of value creation. The question is how big outcome is going to be. That's my way of thinking about it. Really, the math compounds, and that the power of compounding that will bring you with that high valuation. That's what venture capital funds are looking for. But I'd like to answer to the previous question that you really have to build the connections, relations with those funds early on. So even if you're building something, show them, ask them for, you know, coffee or intro mail from someone, like show them that you're building something. Then say that you will come with 10 or 20 K MRR.
I think that's a great advice. Before you start fundraising, first meet few investors before you start. Yeah.
Absolutely, absolutely. And I believe it's easier and easier while you know, rolling this snowball, yeah? Like building relations, building increasing expanding your network, and showing that you're able to deliver. If you're able to deliver, they will believe that you will be able to efficiently deploy the capital and raise something significant.
Okay, that's definitely a good advice. We touched a bit that the current trends in financing, but I wanted to for you to elaborate more, both of the trends in financing, but also probably general economic trends and how they are impacting the investments, and how to deal with the trend, or in order to secure the investment. Like, what are you able to provide any advice in regards to that?
Sure. We have to discuss that the landscape really changed. The change of interest rate has such a profound impact on the financial market and fundraising conditions. Let me briefly talk about, because it's really significant. We were in the world with low interest rate, like super low, or close to zero. When you have close to zero interest rate,
or negative sometimes.
Yeah, when you have close to zero interest rate, whatever and however long from now you have your cash flows, you discount it to today, and it's worth the same as like 20 years from now. You know, try to discount something with zero interest rate, yeah, like $10 billion 20 years from now. You're discounting it, and it's 20 billion. Yeah, then do the math and put 5% or 8% or whatever, like significant number, and try to discount something really far from the future to today, and you have completely different number. And that was the fundamental that changed. Yeah, so interest rate in a businesses that have cash flow far in the future really change the value. With the higher interest rate, the value is much, much lower. And Michał was talking about that many startups lose their value. Of course, we've seen that in the public market. We had a lot of great companies like Shopify, Snowflake, like many of them, but they lose like 40 to 80% in value in 1.5 years. That's pretty significant change. And that impacted the whole ecosystem. Because what is the public market for VC investor? It's the end game. Yeah? So VC funds are going with their investments to the public market with IPOs, and that's the way they exit the investments. So if exits changed, the whole landscape changed. So all valuations in each round, like D round, C round, B round, A round, they are much, much lower at that stage. At seed stage, they didn't change much. So valuations are quite high still because, in fact, at that stage, valuation doesn't matter. Valuation doesn't matter that much because there are many adjustments during the investment. There is liquidation preference and so on and so on. And many active investors at that particular stage of the market. But beyond seed stage, everything changed.
And what's the future? Like how do you project the future if it comes to interest rates and let's say changing the conditions for the startup? Would it be better or would it be worse?
Globally, if I'm talking about the global market, I would say for more than 1 year, we're seeing interest rates or inflation at least going down. Interest rates are quite high, and the policy is quite restrictive at that stage from all central bankers in the world. So if we will go with that trajectory, I mean, of inflation, they will adjust. So if inflation will be lower for a certain time, then we will see some interest rate adjustment, but they will be probably higher than we used to see before that change. So I believe that 2021, what we've seen was something exceptional. We should forget about those valuations and those conditions. Probably they are not going to happen again for a really long time.
Okay, so maybe in order to finalize, let's say my part, I wanted to address the questions around, let's say, challenges and opportunities after securing the current round. Like you mentioned, some external, let's say, conditions. So I wonder, how you will be, let's say, adjusting to those, and maybe you will apply some new technologies that are, let's say, well seen on the market. Can you elaborate more?
I mean, from my perspective, obviously the only thing you cannot buy is the time. That's, everybody knows that. But after you are getting some money on the bank account, some significant money, then the time's value. It's like multiplied by the money that you have on your bank account. And this is because, or maybe like efficiency over time, how efficient you are and how quick you can improve your efficiency, because you always get money and more or less for the run rate. Yes, I mean the runway. So that okay, I have this money for to run the company for 1 year. That's all. Okay, so how much can I build over the 1 year? You are not able to extend this money for run your company for 2 years. It's impossible. So you need to be really prepared.
So what to focus on?
No, I think that the plan needs to be on the, before the investment. And I think on the later stage, investments, nobody will, invest into your company if your plan is not quite detailed, if you don't know, more or less what you will do in that money in some details. So then, you need to quickly start, and you have to have like proper management team, proper idea how to scale the team, all the resources ready, to start. So not that I have my money and then I will search, how to utilize, how to spend them. No, you need to be prepared and, spending the money the next day.
Robert, do you want to add something? Because I wanted to ask you about the most common, let's say, mistakes that, let's say, founders do post-round in terms of, implementing the strategies that they initially wanted. And I don't know whether you have any insights about that, or if not, then just refer to edrone's case, like what type of risks do you see ahead, and how maybe you as an investor could prevent them against those risks.
Not having a plan is not a good strategy in any case. And that's a common mistake of founders, to raise money and then think how to deploy that money. So having plan is good thing, and I would say obvious one. Before it was overhire. I would say many startups were over hiring and then spending too much money trying to do things not that efficiently. Now it's not the case, because investors are paying much more attention to the efficiency, and capital is much harder to raise. So it means it's not cheap anymore, and that means you have to prove what you're doing with that capital. I would say that would be 2 points from me. About the mistakes of founders.
Before, have you made any mistakes in your former rounds, when you're comparing, let's say, your plan towards the final outcome? Have you, let's say...
Yeah, of course, I did a lot of mistakes. So firstly, on the first round, we were not on time with hiring. That was because we were looking at every dollar, a few times, and was afraid to hire some executives, for instance. That was a very bad mistake. But the company was running, and we got nothing after 5 months. So then we started spending money faster, and it worked out. Secondly, keeping some spendings for too long, which means not being on time on firing people, not being on time with closing some experiments. We did some experiments, and we finally
overhiring.
Yeah, no, that's rather like the markets, for instance. We decided to close one of the market, and we seen some early, but maybe not very early, but at some point we seen some we seen that the market will probably not work well. But we said, okay, let's try it 1 month more. Yeah, let's try it 1 month more. And we just burnt that money, basically. So these were the mistakes. We learned a lot about them, about those mistakes. What else? I think that, it's important to imagine your company, how the company will look like when it becomes a bit bigger, when instead of 30 people, there'll be 100 people. For instance, so how you want to build relations, how should your org chart look like, who communicate with whom, and what are your values, what is the culture of the company. If you don't have this in mind, you will quickly maybe not lose the control of the company. That is not happening that quickly, but you will lose the proper view on the things that are taking up, and then you need to ask a lot of people about what you think, etc. I think all the problems are about the speed, the velocity. All the mistakes, when I think about all the bad things I did in the company, was because I was not enough fast, on something. I think, only speed.
Can I ask something?
Yes, of course.
What would you do differently having that knowledge you have today, raising the same capital, the same money, what would you do differently?
Not much, probably. That's that's the problem. Yeah, because well, when I think we invested quite a lot in R&D. Not everything went. We haven't achieved everything what we wanted out of it. But if I will have an opportunity to try again, I will go again because because there are like some outside also factors that cause your success or not allowing you to achieve your success. So not many. Maybe that only the speed. That I will implement faster, implement fast decision-making processes. That's probably the only thing.
Thank you.
Yes, thank you.